Good morning, or good afternoon, everyone, rather, and welcome to today's Audit Committee meeting. I have a few items to get through. And to kick things off, before we give it over to KPMG, we'll turn it over to Sherry.
Hello. I'm pleased to be here today to present to the Audit Committee the 2015 Annual Financial Report. I will be providing a bit of context to the consolidated financial statements and will present a few slides that provide a high-level overview of the city's financial condition. Then Matt Beddick of KPMG will present the findings of their audit. As a reminder, accounting staff prepares the city's consolidated financial statements in accordance with Canadian generally accepted accounting principles as established by the Public Sector Accounting Board. Explanations for significant variances for the 2015 consolidated financial results have been included in the financial statement discussion and analysis section of the annual report, starting on page 19. I intend to explain what is included in these consolidated statements and what is different compared to the December 31st, 2015 tax-based operating and enterprise results for the city that were brought to Council in March. The consolidated financial statements combine the results of the tax-based operations, enterprises, local boards, capital activity, and reserved fund activity. They also account for the two government business enterprises, Kitchener Power Corp. And Kitchener Generation Corporation, also known as the Solar Roof at the Cough. Local boards include the Centre in the Square, Inc., Kitchener Public Library, Belmont Improvement Area, and Kitchener Downtown Improvement Area. The format of the financial reports presented in March for the tax-based and enterprise operating results is significantly different than the format required for the annual audited consolidated financial statements. We thought it would be helpful, by way of the next two slides, to walk Council through the difference in the annual surplus on the statement of operations in the consolidated financial statements compared to the operating results that were provided to you in March for the same time frame. This is approximately $67 million versus $14 million. The consolidated statements contain the operations and entities that I listed out in the previous slide. Further adjustments are then made to these results to have them reported in line with the standards set out by the Canadian Chartered Professional Accountants Public Sector Accounting Board, otherwise known as PSAB. The largest adjustments required to comply with PSAB relate to the city's tangible capital assets, or TCA. The statement of operations includes the revenue streams that were used to fund the creation of the assets. However, the expenses incurred to build or purchase the assets are excluded. The cost of the TCA are added as an asset on the statement of financial position, and these costs are then expensed each year by dividing the cost evenly over the useful life of the asset. This expense is referred to as amortization, and you will see the adjustment for this year's amortization reflected on the next slide. Debt repayments, both interest and principal, are included in the results presented in March, whereas PSAB only allows interest payments to be treated as an expense. There are other adjustments required, but these have a much smaller impact. So what does this mean? The accumulated surplus of $1.24 billion on the consolidated statement of financial position is not a surplus as you'd be used to hearing in regards to operating results. These are not dollars available to be spent. They are a representation of past investments that the city has made that continue to provide benefit to the city going forward. This includes things like the tangible capital assets, investments in Kitchener Generation Corporation and Kitchener Power Corp, and reserves set aside for specific purposes. To clarify, investments in tangible capital assets makes up $1.03 billion of the total $1.24 billion in the accumulated surplus. This, in turn, is made up of thousands of individual assets that will continue to provide benefit to the city. We can simplify this even further and look at one asset. Let's say we built a community center 10 years ago for a cost of $20 million. It is expected to have a useful life of 50 years. At this point, it would have a cost of $20 million, an accumulated amortization of $4 million, leaving a net book value of $16 million. This $16 million is included in the accumulated surplus of $1.24 billion and will continue to provide the city and its taxpayers benefit for another 40 years. In the previous two slides, we saw that the largest impacts on surplus are those related to tangible capital assets. The net book value of tangible capital assets, which is the cost less the accumulated amortization to date, has experienced modest growth over the last 5 years. With the exception of 2015, each year the net acquisitions, or additions less disposals, have exceeded the amortization expense applied in that year. In 2015, to allow for an administrative efficiency, we grouped a number of similar assets into larger pools of assets. Once these pools reach the age equal to their estimated useful life, the entire pool is removed from the cost and the accumulated amortization. This change in the current year resulted in a large amount of fully amortized assets being removed from the financial statements in 2015. This change is in line with the city's existing approved tangible capital asset policies. You may have noticed when looking at Schedule A of the financial statements that the disposal figures are much larger than those that you have seen in the past. But given the assets were fully amortized, these disposals had no impact on the statement of operations and led to no change in the net book value of the assets. The key specific to this slide is that the net book value as a percentage of cost has remained steady at around 68%. If this percentage was dropping significantly, it would suggest the city should review its asset renewal programs. The next few slides will present the financial condition of the city. Financial condition speaks to the city's ability to finance its operations on an ongoing basis, regardless of economic changes and changes in other environmental factors such as growth. This chart shows the 5-year trend in the overall debt balance for the city broken down between the various types of debt. Municipal debt continues to decrease from its peak at $112 million in 2013. 2013 was the last year new debt was taken on for the EDIF program. Therefore, debt is expected to decrease for the next number of years as the EDIF debt continues to get paid down. Net debt per capita, after removing amounts recoverable from enterprises and others, is the lowest it has been since 2010. This can be seen on page 154 in the annual financial report in Section 8 of the Financial and Statistical Review. This chart in front of you shows the 5-year trend in the consolidated reserves balance. As you can see in the graph, the balance has been increasing since 2011. Council passed a consolidated reserve policy in 2012, which provides a framework for building up reserve balances and ensuring they are used as intended. The next couple of slides will provide a bit more detail about the various types of reserves and their balances compared to their target levels. One of the components of the reserved fund policy was categories for improved reporting. The 5 categories shown on the slide were used during budget discussions, and the next slide shows 2015 closing balances within these categories. So this chart, as small as it is up here, is split into 3 sections. First, the top section shows the actual 2015 ending balances for each of the 5 reserve categories. The middle section shows the target ranges for the reserve categories and how well the reserves meet the minimum targets. The bottom section shows the actual 2014 ending balances by reserve category and the change between these 2 years. First, I will draw your attention to the far right total column. Here you can see that the total ending reserve balances in 2015 were $58.3 million, which is 76% of the minimum target balance of just less than $77 million. This balance is up from $52.5 million at the end of 2014. This chart groups all similar reserves into one category and calculates the percentage of the minimum for the full category. There are certain reserves in a category that would be funded above their minimum target that are offsetting those that are below their minimum target. For those reserves that are below their individual reserve minimum, there is a $54 million shortfall. This would suggest that the total reserves were only actually about 30% of their minimum target. So although there was some improvement in the overall balances and reserves, the city is far from being in line with even its minimum target reserve balance. Most of the increase in the year in reserve balances is in the program-specific area, for which there are generally no minimum targets. Some improvements have been made in increasing the stabilization reserves, but these reserves continue to be well below their recommended targets, which exposes the city to financial risk factors such as weather volatility. This next graph combines the city's debt and reserve positions together. Rating agencies consider a debt-to-reserve ratio of 1-to-1 to be financially prudent, which means the city would have $1 in reserve for every dollar it has in debt. As can be seen in the chart to the right, the listed comparator municipalities all hold more in reserves than they do in debt, with the exception of Waterloo and St. Catharines. The city's ratio is about 2 times that of Waterloo and almost 7 times that of Cambridge. At the end of 2015, the city has $1.84 in debt for every dollar in reserve. This shows much improvement over 2014's $2.54 in debt for each dollar in reserve. The magnitude of the city's debt load can largely be attributed to EDIF and was known before that 10-year program was approved. To add clarity between these two charts in the slide, BMA's figures in the chart to the right are calculated for the non-consolidated entity, whereas the graph on the left is presented for the consolidated entity, where certain reserves get moved to deferred revenue on the balance sheet, and it also adds in the reserves of the local boards. The final financial measure to be presented is also the most complete picture of the city's financial health. Financial position per capita is determined by subtracting total liabilities from total financial assets and dividing by the population. This measure shows if the city has enough cash and investments available to pay everything it owes to others, including its municipal debt. The value of $802 presented in 2014 is positive, which means that Kitchener has more than enough assets to meet its obligations. It is also close to both the average and the median of this sample, so Kitchener is comparable to these other municipalities. Finally, as shown in the graph, Kitchener has kept a fairly steady position over the last 5 years, which shows that even though debt levels have been high, the city is not in financial peril. So in summary, the city is achieving an increasingly strong financial position. This trend will continue, providing the city limits new debt issuances to only that which is already planned for in the 10-year capital forecast, and by allowing debt levels to fall as the EDIF debt matures. The city should also continue to build reserve balances. This means not drawing on existing balances for uses other than what the reserve was created for, and continuing to make strides to see reserve levels brought to at least their minimum target levels. Also, continuing to hold long-term investments provides investment income and cash flows year over year and benefits the city's net asset position. At this point, I'd like to open it up to any questions council may have.
Okay, we've got a couple people with questions for you right now. Councillor Singh.
Yes, thank you, and thank you for the presentation. It shows that the city is definitely in the right path for sound financial position. As we currently sit in, I think it will only improve. So, in aspects of the debt, right now, as of 2015, it's $94 million, but again, it will continue to decline as EDIF debt diminishes to zero. So when you look at that in comparison to our debt to reserve ratios, if you just stay the course on that alone, we don't have to do anything different, and that ratio will only improve.
That ratio will continue to improve. We're sitting around $20 million in city-specific debt, so that is much less than the current reserve balances. But again, the warning is don't pull on those reserves or else that won't be in the ratio.
But we are paying fairly accelerated on that debt off. We started off at a high point of $100 million, and I think by 2024, close to around there, we're only going to be in our enterprise debt, which is around 20 to 30 million, that range. That's a considerable debt payment in that span period, right? So
yes, those are on specified repayment terms and will continue to be paid off over the next 15 years.
Exactly. So, and also when we, page 1-16, when we reflect on our debt to reserve ratio, and of course, we need to see how we sit with our peers, but is it not important to be reflective on how perhaps they may have funded their strategic initiatives, where many of those municipalities have had, their local LDCs for power, utility, as well as gas. And some of them have sold those assets off, allowing them to fund those initiatives, where for the City of Kitchener, we haven't done so, and rightly so. In fact, we took debt, and which has been built to the tax base and will pay for itself. Are these not caveats that we should try to point out as well? And I ask this question because I respect that whenever you look at a financial audit, it should be very conservative, but also we should have a full perspective too at the same time.
Yes, it's always prudent to be aware of the circumstances around the comparative figures and know what our circumstances are in comparison to the others.
And my only comment would be, and when we continue on looking at our audits, that we try to point those factors as well.
Yep.
Councillor Fernandez.
Thanks, Sherry. As I'm looking at this, I'm needing to understand a bit better about the 2.0. I think I got what you said, comparing ourselves to Waterloo and Cambridge, that we're 3 times higher than Cambridge, which would mean to me that would be a negative comment as opposed to a positive comment. Is that a correct understanding?
Yes, that ratio of 7 times is more in the negative realm,
Okay.
yes.
Where does our holdings in Kitchener Utilities and Hydro play into, I know those are our assets, right? When you're talking about our assets, that's different than the debt to reserve ratio. That doesn't play into this at all, does it?
No, it's assets that we hold.
Okay. So if we wanted to bring our debt to reserve ratio lower, what would we have to do?
Well, our debt is on a predefined repayment schedule, so there's not really an option to pay that debt early. So what we would have to do is to continue to grow our reserve balances, and as that reserve balances comes up to be in line with the debt level, then we would be at the 1-to-1 ratio.
Okay, so we can't reduce our debt payment, but we can build our reserves. Thinking just from a personal perspective, I always had the impression that it's better to pay off your debt quicker than to put money in the bank sure, we need it for a rainy day, and of course some of our reserves are definitely related to winter control and sudden unexpected situations that can occur, like water main breaks and things like that. Are our reserves, I mean, my understanding is that they're 73% at what their maximum should be, right? Is that
76%.
Oh, 76, sorry.
Again, that's taking the whole population, including them all, and doing 1 ratio overall. I quoted a revised statistic of about 30% funded if you were to fully remove all of the excess funding above their minimums and just look at the amount below.
What do you mean excess funding?
So not excess, they're just above their minimum target. So a reserve has a minimum target and a maximum target,
right?
And it can be anywhere below that, above that, or within that acceptable range. If you strip out the ones that might be slightly above their minimum but nowhere near their maximum, or anywhere above their minimum, that's kind of offsetting currently the reserves that are underfunded. And the reserves should be treated and looked at independently, because you're not supposed to, based on your reserve policies, pull from one reserve to fund another reserve.
Right, and I guess that's where I'm kind of puzzled, because why wouldn't we just look at each individual reserve independently as opposed to lumping them all together? Because it actually, in a way, makes it look better than we really are.
Yes, just for purposes of this presentation, to have all 53 reserves across the schedule, you wouldn't be able to read it. You do get that detail in the budget presentations that will be coming shortly.
That's right. So some of the reserves are near their maximum or over their maximum. Do we have a very robust and maybe a better reserve policy than most municipalities do? Are we being a little bit overzealous with our reserve policy?
I can't speak to that specifically, sorry.
Mr. Chapman?
Through you, Mr. Mayor, I would say no for two reasons. One, you've used the term maximum. Sherry has used the term minimum. So I don't believe we have any reserves that are over their maximums. We're fortunate to have a few that are over their minimum target. But the story for most of our reserves is that we're not even at our minimums. I think the other measure that's important to look at is our debt-to-reserve ratio. And what that shows is that we still are out of balance in a negative sense when compared to the province. 1-to-1 is where we should be. Right now, we're double that.
But that's because we took on more debt than maybe we should have. I mean, it's...
And what it speaks to, though, is the balance between liabilities and debt, and it shows that on balance, a municipality should basically have a similar liability balance as it has reserve balance. We're out of step with that. I guess the other measure to look at is the very last one, financial position per capita, which says when you take everything into consideration, we're basically at the provincial average. And so I would suggest that while some might be a little bit higher in debt or higher in reserve, at the end of the day, we're essentially at the middle of the road when it comes to our overall financial position.
Okay. All right. Thank you.
Councillor Gazzola.
I have a couple of questions on 1.7. These statements are excellent, but for the average person on the street, they're a little difficult to appreciate. For example, our surplus has increased from 38 million to 67 million. People find that like that's a pretty good year, and yet we raise taxes. But I understand what you're doing. I wonder if you could just highlight some of the reasons for that big increase. For example, and on the first part of it, the enterprise surplus, I guess, accounts for there's a $10 million change there, and that's totally, almost all in the enterprise services. What was that? Can you just give me an idea as to what that's attributed to?
I'm trying to remember. I did look at that at one point, but it's not something I looked at most recently.
Mr. Chapman?
I think it's...
Through the chair, we could go back and break that out. I believe a lot of that would relate to the gas supply operation,
sure.
which, as you know, had a positive variance in 2015.
Okay, that's looking further down the page, or I'm looking at 1.3, but donated assets have gone from 6 million to 12 million. Can you just sort of explain what that is? And also, right with that, other revenue types. There are two big changes there. Can you give a person on the street explanation
Surely.
as to what that is?
So donated assets, quite often, for the most part, are things that are coming in from the developers. So as they build a new subdivision, they're putting in roads, sewers, etc., that in the end transfers back to the city and becomes our asset and ours to maintain going forward. So that number is somewhat out of the city's control. It's dependent on the activity of the developers in any given year and the timing of when those assets transfer over in title to the city. Title for accounting purposes is slightly different than title for legal purposes, but again, it's somewhat outside of our control on that number.
Okay, that explains that. I understand that it's hard to again, for the person on the street, it's hard to see how that's really meaningful to the average person. The larger our city grows, the more infrastructure assets we're going to have, but they don't belong to us. Just a couple of other questions on, if I can find them, on the reserves, on that difference between a debt to reserve ratio. This is, do you have any idea on an individual family household what those figures might be? I hear so many figures about how much in debt Canadians are. And I imagine that ratio is a lot more than 2.
So and again, not in a ratio, but if we turn to page 154 in the large stapled package, we can see the net debt per capita, and that's $304 in debt per per each person in the city of Kitchener. So that's been declining for the last few years.
I didn't go to that. Now, is that all debt, federal, provincial, and local? Or is it
No, this is just the city municipal
just
debt.
the city? Okay, so our portion is about 304. How does that 304 equate to the 802 on page 117?
The 802 is taking all municipal assets, all current municipal assets, and taking off the liabilities.
Consolidated, everything?
Yes, consolidated.
Okay. I guess, I suppose if the senior governments did that, we would have a positive figure there too? Okay, I'll leave that. Okay, thank you.
Okay, that looks like it's all the questions.
So at this point,
Thank
I'll
you.
turn it over to Matt Beddick from KPMG, and he's going to present the findings of their audit.
Great.
Good afternoon.
Good afternoon.
I
Welcome, Matt.
was told I was supposed to make this fun. Shout out to Councillor Ioannidis. I like the shirt.
I'm looking forward to it.
I never said I was going to be successful. I was just told I was supposed to make it fun. Sorry, with that. Oh, okay. Our presentation, I understand, was printed. It's not going to be on the screen, so I will walk through it. Unfortunately, I don't have the page numbers that you have, so they were happy enough to lend me this version here. So the purpose of our audit really at a very high level was to confirm the results that were presented, as Sherry mentioned, back in March and as were reconciled here today. We presented before this committee back in the fall our audit plan. And if I can bring your attention to page 1-22, which is our executive summary, we do state that there were no changes from the plan that we had originally presented. In terms of the completion of the audit of the consolidated financial statements, we are done. At this point, we're just awaiting 2 final things that have to be completed prior to issuing our standard auditor's reports on those. And that is the approval of the financial statements, and we are awaiting 1 final letter from one of the city's external legal counsel confirming some legal matters. The audit reports that you have in your agenda materials are clean audit reports. They don't have any qualifications or modifications, which is good. It's what you'd expect to see. As was discussed, the consolidated financial statements do include a number of the other entities, specifically the Centre in the Square, Kitchener Public Library, Kitchener Downtown BIA, and the Belmont BIA. We have already concluded separate audits on those entities and issued clean audit reports thereon. On page 23 of our report, we do provide an update with respect to our audit risk with respect to fraud in the completion of the financial statements. And let me be very clear that this risk refers to the risk of management override of controls, things that staff may do to try to intentionally misstate the financial statements. This is a requirement of any financial statement audit, and certainly there's nothing specific to the City of Kitchener. With respect to this risk, we're required to take a number of steps, which we've outlined in the bullet points to the right. I'm happy to conclude quite emphatically that we found no issues whatsoever in this area, nor did we identify any risks that we thought were anything other than the absolute lowest they could be. On page 24, we do provide a bit of an outline of the major captions in the financial statements and the types of procedures and the outcomes of those procedures that we performed. I'm always amazed that I can somehow boil it down to one page, because the culmination of the audit is literally hundreds and hundreds of hours and thousands of pages of documents from both our audit team and the finance team to my right and left and behind me, and it doesn't even begin to tell the amount of hard work that your team has done here in preparing the financial statements and preparing the audit, and we appreciate the hard work and cooperation that we received from them there. On page 25, we do identify that there are some critical accounting policies. Those are outlined in the financial statements. There were no significant changes this year with respect to those. We do provide a bit of a description to what Sherry had referred to with respect to the new grouping of asset pools. Sufficient to say that this was an administrative undertaking to make things easier, and is quite consistent with what we've seen and recommended to other municipalities, and is quite appropriate under the circumstances. On page 26, I want to bring to your attention two other items. The first is an update from a matter we brought forward last year, and that's with respect to brownfield and adaptive reuse agreements. I'll remind the committee that this is a situation whereby a developer may redevelop a brownfield area within the city and is eligible to receive certain grants based on the increased assessment base of that property over a period of time. Within the city itself, that's no problem, but we also understand that the region has also piggybacked on some of these items. And there can be a bit of a mismatch between the timing of the payments or the grants that are recognized to these entities and when it is approved by the region for their portion thereof. We're happy to say that no adjustments or corrections were required as a result of that transaction flow this year. The other matter to bring to your attention is an item that's brought up in the future, and we touched on it, brought it in the past, and we touched on it at our planning meeting, and that is the adoption of PSAB 3260, liabilities for contaminated sites. I'll remind the committee that during this year, a new requirement for accounting was released that required the city and every other municipal organization in the province to identify whether they had any contaminated properties that were either active or inactive. Active meaning a property that's currently used for active city operations, such as a park, a works yard, a fire station, so on and so forth. But we're specifically now looking at inactive properties, properties that aren't currently being used for municipal operations. If inactive properties have contamination and other criteria are met, such as the city taking responsibility for that, a requirement to remediate, and a requirement to incur costs in the future, a liability would be required to be reported in these financial statements. Staff went through a very comprehensive process to go through these steps, including identification of all properties owned by the city, classifying them as inactive or active, and then producing a risk assessment process with respect to those inactive properties. Following that process, it was determined that there were none that met the criteria that I just outlined, and as a result, there's been nothing that's been recorded in these financial statements. Let me be very clear, though, I am not saying that there are no contaminants within any City of Kitchener properties. I can't comment on that. I'm not an environmental engineer, but there were none that met the criteria of the standard. In our work with respect to this criteria or this standard across the province, we have seen in a number of municipalities, both upper and lower tiers, rural and urban, have a variety of results. So some cities do have amounts that have been recorded, so they've identified properties that meet this, but there are plenty of other cities that do not. And that was consistent with our expectation of the standard going into its implementation. On page 27, we just identify items with respect to audit adjustments and differences. As a result of our work, there were no corrections that were required to the financial statements, which is a check mark for the state of the records that we received when we commenced our audit. And as a result, there were a handful of very minor uncorrected amounts. These are immaterial, and both KPMG and management have concluded that they are not material to the financial statements. I won't go through the appendices to our report. They're for your additional information as necessary, but I'd be happy to take any questions at this time.
Okay. I have one of the three of you. Did you accidentally click in, or did you want to speak? Oh,
sorry.
Oh, it was accident. Okay. So Councillor Gazzola then.
Yeah, I have a little question, but before that, I'd like to make a comment that having sat on all three sides of this issue, at one time in the position that you're at, and at one time in the position that these people are at, and now in a different position, I'm pleased to, I'm very satisfied with the report that's being brought forward to us, where it says a great deal about our city and how good a shape we're in, not only for today and for the future, but where we've come from in the past. So just thank you for that. I just wanted to, you mentioned you haven't signed off because of a legal, is that can you say whether that's a big legal issue? Or
no, I can comment on that. We're just required to receive confirmation from certain of the city's external counsel on the status of certain claims outstanding. Due to the audit standards that require us to have this information in a very short time before this meeting that we're having today, we just don't have a response from one of those lawyers yet. That's very common at this stage of the game. We expect to have it this week sometime. We don't expect any issues to come from that.
Yeah, sometimes the lawyers are slow.
When we give them a call, they tend to hurry up.
Just the one question, the one item that you mentioned, it's this pooling effect. And it was a $94 million hit. Can you just explain that a little, go into that just a little bit more?
Sure. I'm not sure it's a $94 million hit. That's been the reduction of the cost as well as the reduction of the accumulated amortization. And so really for administrative expediency, the city will take a large population of individually small assets and group them together by year. And based on the fact that these assets have an estimated useful life of, say, 15 years or 25 years, we'll actually deem them to be disposed of for accounting purposes at the end of their useful life. So rather than counting, the hundreds of desks that might exist, we just say those desks last 15 years, and we know each year we bought X number of desks and we spent X amount of money on each one. So then when we come to the end of that 15th year, we basically write those off. Because they're fully amortized, there's no impact on the net operating surplus for the year, but it does keep the financial statements cleaner.
So do you do that with everything? Do we do that with everything?
You would do that for assets that have a large individual item or something like that. You may not do that for the building we have here. You may not do that for individual, say, fleet types of things. But you could do that for sections of sidewalk or section of road surface or other road implements.
Good, thanks. Just one quick, on the contaminated site. So we have, according to the new accounting auditing rules, we've done everything that needs to be done, and we're clean as far as your reporting is concerned.
Yes, there were no items that met the accounting standard.
Yeah. Thank you.
You're welcome.
Councillor Marsh.
Thank you, Matt, for your presentation. Just wondering, the way that you have outlined the chart on 124 is you talk about how in the categories of the different columns is that you've got your areas of focus, why, and significant findings from the audit. But when I was looking for findings. I was looking for the thumbs up or the this is okay or the thumbs down, and really we're not getting a whole lot of temperature. We're not getting much of that. There's not a lot of findings in here. It's more just telling us what you did. And I'm just wondering, I guess that's just typical of any audit report, but I would have liked to see a little bit more, and this is a good thing because blah, 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 or this is something that we need to look for. You know, this is a problem, or what I want to know. So I'm not someone who reads financial reports daily, thankfully. So can you help me out and tell me why we don't have too much about the actual findings?
Sure. As a financial statement auditor, we are discouraged, and I use that word quite interestingly. Discouraged means not allowed to. Provide, I will call it, piecemeal conclusions on individual items. So we're almost not allowed to say thumbs up on cash investments, thumbs up on payroll. It is accumulation of all the audit evidence that we have obtained through the course of our audit. And so what you can take from some of the other items that I've discussed, the fact that the audit report is a clean audit report, so that we did not have any, there weren't areas that we were prevented from looking at, there weren't areas where we found material errors. I commented on that we did not have any items that we required correction to the financial statements. So that's another sort of indication. That's sort of thumbs up on all of the categories, because we didn't find anything in our work that was wrong. So that's sort of a wishy-washy way of answering your question. I appreciate that.
Okay. It would make it more fun to read if you, just a tip, but I guess if you're not allowed, then that's fine.
Yeah, so I don't know, maybe it's a yellow, green, or red, a green all the way down.
That would be useful.
We are precluded from providing what we refer to as piecemeal conclusions on individual items. We really only comment on the financial statements as a whole.
Okay, thank you.
Councillor Davey.
Thank you, Mr. Mayor. I have no questions. I just wanted to move and comment at the appropriate time.
Okay. Well, there don't appear to be any other questions. So, okay. You just click back in.
If it's going to be comments, sorry.
Yeah, that's fine.
Yeah. Thank you very kindly for the presentation. It doesn't get much more fun than this.
Well, just before we get into, are you moving?
Oh, yes, sorry.
Okay.
Yeah, I'm moving the acceptance. And I just want to comment. I looked through the report, and it's our job to ask questions and poke and prod. And it was difficult because, like Councillor Marsh said, there isn't a big thumbs up or report card on this, but when an auditor says things like there's no new significant risks, there's no irregularities, there's no items or errors required for correction, that's about as big as a A+ you're going to get, I think, when it comes to audit results. So I'm very happy to move this, and I've said this in the past, but I have every confidence in the finance division of the City of Kitchener, and I will share some of my members of Council's sentiment that I think some of the statistics that we have in the graphs do paint not as strong a financial position as the City of Kitchener is actually in when you take all of these things into consideration. But I do want to highlight the point that our finance department has done a fantastic job as usual.
Thank you. Any other comments? Councillor Gazzola?
I'll make a quick comment.
Yep.
Just to Councillor Marsh, when you're dealing with financial statements, audited financial statements, you either get a clean report or a qualified report. And we have a good, clean, green, gold report. If it's qualified, they will give you all the reasons why it's qualified. Then you'll get a lot of stuff that you don't want to get. So this is good.
Thank you, Councillor Gazzola, for helping me out there.
Okay. There don't appear to be any other comments, so I'll just add my own. I just want to thank you and the team for the great job you've done again this year. Not you, obviously, as auditors, but more importantly, our entire accounting team that makes sure that our books are top-notch day in and day out throughout the year. And that obviously makes your job much easier and helps ensure that we get the kind of unqualified and excellent report that we have. I'll also just let Council know that part of the process every year in advance of this meeting when we sit down to review this and the agenda is for the auditors to also meet with myself as chair in the absence of any staff, where I ask the requisite question, are there any issues that we need to be aware of? And because there's no caucus session right now, there are no issues that we need to be concerned about. But that was done, and I just wanted that to be reflected in the minutes as well. So that's further recognition that staff have done a top-notch job. So with that, it has been moved. Committee, so we don't need a seconder. All those in favor? Opposed? That is carried unanimously. Thank you. We'll move on then to item number 2, the second quarter audit report. And we'll turn it over to Karina.
All right, thank you. Good afternoon, everyone. So the status report is report FCS 16085 in your package. Just as a summary of the work that I've completed since our last audit committee meeting, which was actually in December, since we didn't have a March one, I've been working with my team to work on the community centers review, which I'll be presenting to you today. Also in progress at this time is a comprehensive review of the accounting division and a follow-up review of legislated services as well. So after a year and a half of working on this review, I'm happy to be able to share the results with you of the Community Center's comprehensive audit with you today. It's been by far the most comprehensive and complex review done to date, as you will see shortly. The purpose of the review was similar to other comprehensive reviews that we've looked at. We've looked at a number of different components, such as the services that they provide, risks affecting the unit, processes, org structure, resourcing, and culture, to see where there's areas of strength that we should be leveraging and identify any areas for improvement. In this case, we also had the specific objective that any recommendations coming from the review would strengthen the role that community centers have in building safe and thriving neighborhoods. So we began this review with our typical inward-facing consultation to gather opinions on a number of topics, and that was gathered from community center staff, management, yourselves, and other divisions that work closely with the centers. Given the size of the section and the number of part-time staff at various locations and working various shifts, this in and of itself was a challenge. But in the end, through various means such as surveys, focus groups, and interviews, we were able to gather a large amount of input. And this included 22 staff and management interviews, 21 staff participating in focus groups, 46 staff surveys, 13 focus groups of internal stakeholders, and interviews with all members of council. Unlike other reviews, though, we felt that it was also important in this case to gather input from external stakeholders. And for this reason, we had roughly 3 times the normal amount of consultation and input compared to other reviews. And this included 595 citizen surveys, 15 focus groups with external partners, such as House of Friendship, Horizon, etc., 16 focus groups with neighborhood association volunteers, and 6 focus groups with council advisory committees. We then used this input to take the staff through a risk assessment where they ranked risks and opportunities based on likelihood and impact that were facing their section. And one of the major risks identified was that the current organizational structure was not supporting staff in achieving their objectives. So we also did an in-depth review of the org structure. The rental business was analyzed and benchmarked against other municipalities. And finally, we reviewed many documents, reports, and strategies as background research for the review. So they say that a corporation's greatest asset is its people. Without dedicated and passionate staff, a company will fail to meet its objectives, and we are no different. Fortunately for the City of Kitchener, the findings of this review show that the Community Centre section is staffed with very professional and knowledgeable staff who show a great passion for the work that they do. They are committed to great customer service and go the extra mile to serve their citizens. And this is a great starting point from which to build on other improvements around process and structure. In addition, the services and programs that are offered at the centres are valued by the public and an important part of their quality of life. The centres themselves as a destination are seen to be warm, welcoming, inclusive, and safe. Despite that very positive image of community centers that I just described, there were a number of risks and issues that were identified, and I've summarized the main themes for you on this slide. First, staff had many suggestions for ways in which we could improve the way in which customers are served, and how there is a need to work more closely with the neighborhood associations and community partners to meet the diverse needs of our community. They also mentioned some internal challenges with their perception of fairness in the hiring process at some centers. Related to hiring is the high turnover rate, which is common in a part-time environment, but nonetheless it leads to higher workload for management, who are doing the recruiting, and staff who need to pick up the slack and train the new hires. So this impacts morale and efficiency. As mentioned, a large percentage of staff commented on various parts of the current org structure, which was not effective, including having too many layers of staff, not enough decision-making authority at the centers, not enough full-time opportunities for staff, and spending too much time in meetings and working on projects. There were several suggestions on how communications could be improved internally and with stakeholders. And finally, some staff felt that decision-making was very top-down, which hampered their ability to get the job done in an efficient manner. On the stakeholder side, customers observed that there were too many rules and procedures to follow in order to do anything at the centers, which was discouraging for them and sometimes a barrier to participation. In addition, it was felt that the needs of youth and older adults were not being met as well as they could be, and that more attention is required in these areas. Although the centers were seen as a community gathering space, the cost of rentals was seen to be discouraging more use by community groups. There's also a need to re-examine the working relationship between the city and neighborhood associations in order to leverage opportunities to improve service delivery. It was felt that the centers and their services could be marketed better to reach non-traditional users and increase the usage of our centers. And finally, there were several suggestions about how relationships between centers and stakeholder groups could be improved. So as you can imagine, with the amount of consultation and findings that came out of this review, the amount of recommendations generated was quite large. In total, there were 74 recommendations that were made to address the findings, as well as additional recommendations made around the new organizational structure. I won't be taking you through them all today, but I've chosen to focus on some of the overarching recommendations, including the org structure, as well as some specific items that were requested by Council to be looked at as part of this review. The recommendations aim to build on the strengths, such as the passionate staff and the valued programming, in order to contribute to the work of building safe and thriving neighborhoods across the city. Given the size of this review and the amount of time it took to sift through all of the data, results were split into 2 reports for staff so that they didn't need to wait until the end to start working on the recommendations. The first report was released in October last year, and then, as you know, the org structure was finalized and revealed in May of this year. The team is now working hard to fill the vacant positions and build their new team. Once that is complete, the second report will be released in the fall of this year with more recommendations. Since some of the recommendations that I'm going to talk about today have not yet been released to staff, I ask for your patience in that I may not be able to divulge in too many details at this time out of respect for staff. One of the largest changes to come out of this review was the new organizational structure. You all received emails and had conversations about this when it was announced in May, but I'll just summarize them here for you today. All of the changes that were recommended were based on the issues and risks that were identified during the consultation. Careful consideration was made to minimize the negative impacts to staff, while still making meaningful changes that would set the section up for success. The changes were all made within existing headcount and budget and simply reallocate resources in a more strategic manner. The first change was to pull the supervisors, or previously named district facilitators, out of the day-to-day operations of the centers and focus their work on supervision, coaching, community development, and strategic planning. In order to do this, full-time community center facilitator positions were created for each center. These roles report to the supervisors, but have the authority to make day-to-day decisions relating to the operation of the centers. This will help things run more efficiently, as time will not be wasted waiting for the supervisor approval on every single issue. The second important change was to make the roles consistent across all centers. In the previous structure, there were a separate set of roles and responsibilities for 7 centers where the district facilitators resided, and another set of roles at the remaining 6 centers. This was confusing for both staff and stakeholders with so many titles and overlapping roles. As mentioned, each center will now have a facilitator as well as an office and program assistant as the lead administrative position. Depending on the size of the center, they may also have additional administrative staff in the office and program clerk roles. All centers will continue to have customer service attendants to provide frontline customer service and to staff the rentals. Each supervisor will now be responsible for 3 or 4 centers in their cluster. Each cluster will also have a part-time neighborhood liaison position, which will be responsible for providing support to community partners and neighborhood initiatives outside the centers. They will be a resource focused on community development, which is critical to the success of moving the neighborhood strategy forward. It was observed that the city tends to add part-time positions piecemeal as the demand for services grows. It was recommended that several of these part-time positions be combined into new full-time positions. This provides more stability in employment for staff, less turnover, and a consistent face to the customer at the centers. There will always be a need for some part-time staff, though, to fill the ebb and flow of customer demand. The final change that I'll talk about is the addition of a position dedicated to project management support and service improvement. This position is intended to provide project management of the upcoming community center renovations or new builds, as well as any divisional projects. They will also act as a section representative on corporate projects or committees, which will free up staff and management time from this task. I feel that this new structure will empower staff to serve the customer in a more efficient way and provide dedicated focus on community development. Communication will be improved and silos will be broken down. Already, the process of fine-tuning the org structure and deciding where successful incumbents will be situated has helped the management team to strengthen their sense of team. This next recommendation is one that you've seen in many of my other reviews, and that's because it's the cornerstone of success for any organization, department, division, or team. Staff had commented that they did not have a formal mandate which outlined their purpose for being. They felt that their purpose was generally to provide low or no-cost programs and services to the community, but they were often faced with pressure from council and senior management to meet their budget targets, increase revenues, and increase fees. The good news is that when asked what the mandate should include, there was a widespread consensus from all stakeholder and staff groups on the desire to be an affordable community gathering place. So therefore, the recommendation is for the director to lead a process with staff to flush out the mandate based on this input and communicate it widely to council and other stakeholders. More importantly, all decisions should then be made through this mandate lens. And that's not to say that they should abandon trying to make their budget targets, but rather when they are making decisions such as fee increases or programming changes, that they look at it through this perspective of their mandate. This next slide doesn't have a recommendation, but it does speak to some of the analysis that we did on the rental business, which flows into the other recommendations. The city aims to provide affordable rentals to the community that are subsidized by the city, rather than trying to recover all costs through the rental fees. The benchmarking information showed that most cities also follow a similar philosophy and that they are there to provide space and enable other community groups, and not out to make a profit or break even. In terms of the rates, the city was found to be comparable to other cities and private venues, but the survey data did indicate that some citizens still find that the rates are too high. Although no decreases are recommended at this time, it is something to keep in mind when reviewing fees and charges in future years. Over the past 5 years, we've seen a steady increase in revenues for rentals, linked directly to the increase in fees. But we have seen a steady decrease in the actual number of rentals and the attendance at those rentals. As you saw on the previous slide, rentals of community centers are on a downward trend, possibly due to the rates being too high. However, we also see that the centers in general are not being used to full capacity, when taking into account the neighborhood association programming, city-run programs, other partner services or programs, rentals, and drop-ins. Staff and stakeholders commented that they felt that a lot of citizens do not even know the centers exist, or they assume that they only offer sports and recreation activities. The full breadth of the community supports and services offered is not widely known. It's therefore recommended that more effort and funding be spent on trying to bring awareness of the centres and what they have to offer, and reaching those unengaged sectors of the population. They should work with the Communications and Marketing Division to develop a communications template that could be customized to the needs of each individual centre. And this would outline how they could reach more people. And more budget should also be allocated for marketing. This will help drive citizens to the centres and increase the utilization of these great community assets. This topic of hours of operation at the centres was requested specifically during a council strategic session. As part of the review, we analyzed the cost of 3 different service level improvements related to keeping the centres open longer. The chart that you see in your reports shows the estimated costs for both the community centre staff and any additional custodial staff that are required. The first option is related to weekend hours. Currently, most, but not all centres are open Saturday mornings for neighbourhood association programs, but are closed for the rest of the weekend except for private rentals. The cost to keep all 13 centres open from 9 to 5 on Saturday and Sunday is approximately $258,000 per year. The second option is to standardize the open and close times across all centres during the week. Currently, they all open and close at different times based on the programming. This option was considered based on feedback from citizens that they never know when they are open and have arrived only to find that a particular centre doesn't open until later. In order to move all centres to open at 8:15 and close at 9:30 p.m. during the week, it would cost an additional $71,000 per year. And the last option looks at extending the weekday hours even further to allow for early morning or late night programs. The chart in the report shows 5 different opening times in the morning and 3 different closing times in the evening. All of these options assume that we have first moved to the standard weekday as outlined in option 2, and this is just the incremental cost. So for example, if we move to a 6 a.m. open time, it would cost the $71,000 from option 2 plus an additional $28,000 per year. And if we chose to also close at 11 p.m., it would be an additional $19,000 plus additional custodial costs, which would need to be determined. So this information is just being presented for your information at this time and is being referred to CLT to determine if a budget issue paper will be prepared for council consideration. So the final topic that I'll present for this review is related to the neighbourhood associations. The risk assessment identified several risks related to the neighbourhood association model of service delivery. One of those risks relates to the fact that this model relies heavily on volunteers to organize and deliver the programming in the centres. However, volunteerism is trending downwards, with less and less people willing to volunteer for long-term board positions, preferring to volunteer for short-term one-off events instead. The challenge for the city is how to sustain our delivery model and attract and retain volunteers. Another area for consideration is the affiliation agreement, which neighbourhood associations must sign in order to enjoy staff support and use the community centre space for their programs. The agreement has not been reviewed since 2002 and could use some updates to make it more relevant and specific. And finally, the facility booking guidelines policy was looked at. It currently gives priority and first right of refusal to primetime slots to neighbourhood associations, which is similar to how other cities allocate space. However, the space can be underutilized if time is blocked off by the associations and never used. Given that this material is from the second report, I can't get into the details of the recommendations at this time, but there are specific recommendations on how to address these issues that will be presented to the staff in the fall. And they'll be addressed not in a vacuum, however. It would be recommended that staff work closely with the neighbourhood associations on these issues. So in conclusion, I just wanted to end by reiterating that community centres and the programs and services that they offer really are making a positive impact on the citizens' quality of life in Kitchener. They are the perfect launching point for the city to support the neighbourhood strategy and to expand support for neighbourhoods outside the walls of the centres. Although there were many recommendations in the 2 reports, they do aim to build on the significant strengths that are already present and position staff to better support neighbourhoods while still mitigating the risks. So are there any questions?
Councillor, thank you for the presentation, Karina. Councillor Singh to start things off.
Thank you, Mr. Mayor, and thank you, Karina. This is an extensive piece of work, and I think it's something that will decide kind of the feel of our community going forward, especially because I think beyond trails and parks, community centers are the one biggest asset that exists in our communities that we do very well. The report, and you outlined it, does carry a lot of recommendations. So even though this is for information, at what point will they be buy-in by council to direct staff to look at some things and perhaps maybe we may be misguided in others and saying that maybe we're not there yet? At what point do we have that conversation?
Typically, we don't get approval from council on any of the recommendations. They're my recommendations that go forward, and management needs to respond to the audit report to say which ones they will be pursuing, and if they don't pursue some, why not? How else will they address the findings? With Report 1, they've already done that, and they have a full implementation plan in place, and they're already working on a number of the recommendations. When Report number 2 comes out in the fall, we'll have a similar process where they'll circle back to me.
Will there be an explanation provided back why some were there is progression and others maybe we're not we're passing out on?
That typically comes when I do the follow-up review a year or two later. What I usually provide is a chart of all the recommendations that were in the original reports and how they were addressed by management. And if there were any that they had said that they would not pursue, that is where the reason comes out. What I typically do, though, when
that would be in a couple of years?
That's typically when a follow-up review is done, yes.
That's too long, though. I guess if the work is happening now, the review is taking place, and we're implementing consideration of changes, wouldn't that report need to come back a little sooner as to what is being looked at and what's not?
Typically, when I give them 3 months to respond to the actual report, and that's when they give me their action plan. So if there's anything that I feel that they are not addressing appropriately, I will question them at that point to make sure that they are looking at the finding. But in terms of how the actual implementation, it will actually take several years to get through all of these recommendations.
Right, and I'm trying to grab my mind around this. That obviously this is the internal review, and for staff to having conducted it, and the work needs to come out of it on its own. But I'm still seeing, is there an opportunity, or how can there be more of a community dialogue and discussion saying, okay, we've made efforts to really pinpoint some changes that can be made, or efficiencies or improvements, and certain things that we would want to add on or look at differently. I'm kind of circling back to my initial question. So there's no opportunity for a wider scope of discussion by council and community?
Mr. Mayor, you want to add something?
Through you, Mr. Mayor, I'll let Ms. Tasker respond in terms of her usual practice. I think it might be helpful to give you a sense of what the recommendations are, because I am pretty sure that council doesn't want to get involved in the vast majority of them. So one of the recommendations to improve internal communications is to create a shared drive where people can save all of their files. That's the scale of many of the recommendations that we're talking about. They're administrative in nature, and the director of that unit is responsible and accountable to me to make action on that. For any items such as the expansion of the hours of operation that require council support, we would bring them back.
And Mr. May, I respect that, and at no point do I ever recommend that this council take at a very micro level of managing staff's duties. I can only go by the presentation that was given to us, and the recommendations that are outlined here seem a more operational change that would be, impactful to the community. That's why I was asking if beyond the micro level that you referenced, if there are other things that council would have a buy-in on.
And through you, Mr. Mayor, that's exactly why I believe Ms. Tasker highlighted these for you, because these are really the only ones that I believe council would have an interest or a role in approving.
And so I'm guessing then we can carry on that conversation offline as well. Thank you. I had some more questions. I'll keep back in.
Councillor Davey.
Thank you. To clarify then, so staff's going to be looking at these. So at this point, are staff looking for input from council on the specifics of the items that are in this report?
No, they are not.
Okay, thank you.
Councillor Fernandez.
Thanks, Karina. Just looking at 2-8, which is the service level hours expansion, I'm a little bit, and maybe I'm just not understanding the graph here, because it says if we were to increase the hours to 7:30 a.m., it would cost us $9,000, but to open up at 8 a.m., it's significant. Like that's only half an hour. It's only going to cost us $3,000. Like, can you help me understand why there's such a discrepancy for half an hour?
There's a very detailed calculations that go behind this, but some centers already open early, so there would be no incremental cost for them.
Gotcha. Okay, thanks. So then going through your presentation, you were talking about the utilization and marketing, and I do believe, and especially in areas where there's a lot of commuters, so that would be Ward 4. There's a lot of people who commute, so oftentimes they're not using the community centre to the full ability because it's closed, midway Saturday and not open on Sundays. Do you think that maybe instead of spending a budget towards marketing, if they're open more often, that in itself is going to be a generator of more activity and more awareness about centres?
Somewhat. I mean, there will certainly be the traditional users that come in to use, to sign up for a yoga class or to do a program. But what we're getting at is that there's a lot of other programs and community supports, all of those partners like House of Friendship and Horizon that provide things that are not recreation and leisure that we want people to be aware of that they can go to their community center for. So that's kind of who we're targeting for the marketing piece of it. I don't disagree, though, that it needs to be looked at in totality to say, what are the needs of your specific area around that particular community center? Are we looking at more people that need those supports? Are we looking at more commuter-based? And where do we need to spend the money?
Okay, I can appreciate that. I think you're right. It's got to be all combined together, and maybe each individual community center's marketing budget could differ.
Yes,
basically.
And that's what we're saying, is that we need a template from communications and marketing that can be modified depending on the needs of that particular area.
Okay. So when you were talking about hours of operations, and the first one, of course, you listed with the Saturday to Sunday, 258,000 is for if every single center is open at that time. Because am I mistaken to understand? Because you did say some centers are open only in the morning, and I know ours is in June, but that would be bumping up the whole time frame.
Yes.
Would we see a later start for some, a later opening during the week for some, or is that we wouldn't want to
that's not included in the calculation, but that's something that can be considered, so that if it was really important to you to have Saturday and Sunday open, is there an opportunity to scale back somewhere else?
Okay. When you're talking about volunteerism trending downwards, I think that there's because I talk to a lot of volunteers, and one of the things I hear consistently is not necessarily that they're not volunteering because they don't always have the time. It's because there's too much red tape. There's just, I got to sign this and I've got to sign that, and I can't do this and I can't do that, and they think, oh, what the heck? They just throw up their hands and say, forget it. So maybe what we're mistaking for a downward trend in volunteerism is actually volunteers who are frustrated and just say, you know what, if I just work on this particular task, so the expansion of a community center or a special event, then I know I don't have to I don't have to fill out all that red tape. Have we looked at that as one of the reasons why volunteerism is?
The volunteerism trending downward is not specific to community centers. It's across all sectors. Mm-hmm. And then it's just a challenge for us to attract those volunteers that are left into our organization. Now, certainly the red tape is something that has come up, as I mentioned in the findings, is community groups, including volunteers, find it hard to navigate City Hall. And I think that is something as part of the neighborhood strategy that a group of people is taking away to look at, to see where are those pain points and what can we do to decrease that red tape while still mitigating the risks. You know, we've put those things in place to mitigate risks, so how do we maintain that?
Okay, all right. I'm very interested in the discussion around expanded hours, and I'll be interested to hear what other comments are coming forward from other councillors.
Councillor Singh.
Yeah, thank you. And so part of the review, was there a closer look, just kind of carrying on with the same questions with the aspect of the NAs that arrange the programming in the community centers and the resources that are available to them through their reserves, aspect of, you know, what is an adequate reserve? You know, part of the review, you talked about the mandate, you know, the aspect of providing cheap and affordable services for our residents. And so is the right type of fee setting, is it appropriate when there's already adequate or more than necessary reserves in place by that NA? Was there a review of that as well, or?
We did look at the question of some neighborhood associations having more reserves than others. I can't get into the details right now of the recommendations around that, but it was looked at, yes.
Okay. All right, that was looked at.
Mr. May, you wanted to add something?
Yeah, through you, Mr. Mayor, this is an issue that's come up on a regular basis. I think I would say that probably the correct avenue to deal with that is through a review of the city's affiliation policy, which I do see coming out of this probably in 2017.
Okay, that's fine. I just wanted to make sure that
yes, we
if
did
there
look at
was
it.
a scope of look and if there were recommendations coming, but if there's a more in-depth analysis that's coming forward down the road, I think it's a good idea for us to be a little bit more reflective and consider changes. Thank you, and I'll make my comments after.
Councillor Gazzola.
As a result of your study, there have been a substantial number of changes in staffing already. Is that correct?
Yes, there have been.
Can you tell me what the new cost of this revised organization is? Is there?
It was all within existing budget.
So then you did all this switching around and with no dollar impacts whatsoever.
That is correct.
Okay. Okay, that's fine. The only other question I have, when this study was going on, I've often put forward my concept that of independent community centers for each community, where they would run their complete operation totally themselves, be given a number of dollars annually to use, and they would have their own rules and regulations and what have you to fit in with their community, because every community, every area, neighborhood is different. Has any thought was that discussed, or was that just immediately thrown off the table?
We did discuss it in terms of our project team as an idea. We looked at kind of the pros and cons of that type of a model, and if we're already seeing downward trends in volunteers, it presents a bit of a problem when you're putting all of your faith in a group of volunteers to run everything within the community. I think by having a backbone of staff to support it, you ensure that service continues on a regular basis. I think we should utilize volunteers as much as we can, and certainly to your point about making the community center suit the needs of the particular neighborhood that it resides in, I think that's very important, and it should continue as well. And I think that's part of the point of the neighborhood strategy as well.
Well, I take your response to Councillor Fernandez on the volunteerism, and you quickly stated that wasn't just something to do with community centers.
Right.
That's our society in general.
Yes.
Whereas I didn't look upon on that as so much as a volunteerism. Each of these community centers would be operated as an ongoing business, the same as the center and the square, only they'd have their own board to look after it. That's fine. I'll follow up further. So as far as the changes you've made to date, it's dollar-wise exactly the same bottom line as in prior years.
Yes.
Thank you.
Councillor Marsh.
Thank you, Mr. Mayor, and Karina, thank you for yet again another thorough report. I want to ask just about the affiliation agreement review. I can see that as we go forward with the neighborhood strategy and encourage groups of neighbors who are not necessarily completely affiliated with the neighborhood association in their neighborhood, would want to, receive some of the supports from city staff that we only currently allot to neighborhood associations. So I'd like to encourage that review to happen sooner than later.
Okay. It is coming as part of Report 2, so it will be in the fall that they'll actually receive the direction to go forth and look at it. So Michael's writing down something. I'm sure that he'll pass that on to staff when they do look at it.
Okay. And when we read reports about volunteerism and the official, the people who volunteer within official capacities, that we know that that is a trend throughout North America that's happened over the last 20 years. That's not unique, and that's including people who volunteer on boards of directors, etc. But through our neighborhood strategy, I'm wondering if we are going to be able to capitalize on the energy and the interest in people fostering a stronger neighborhood, and perhaps encouraging more informal roles of volunteering that wouldn't necessarily be captured in statistics, but that would still enhance our communities nevertheless.
Yes, and I believe the new neighborhood liaison roles are going to be a staff position that will help encourage some of those activities outside of the centers and the smaller groups that maybe aren't the neighborhood associations to organize and have these initiatives in their neighborhoods.
Okay.
Mr. May, you wanted to add something?
Yeah, through you, Mr. Mayor, I just want to say that that's exactly what the neighborhood liaison position is about and exactly what the neighborhood strategy is about. We're incredibly lucky to have our neighborhood associations, a stronger network than just about any other Ontario municipality. But there are a lot of informal groups to come together that could use some help as well, and so that's a lot of the work of the neighborhood strategy.
Wonderful. And just on that, Mr. May, if I may, will those neighborhood liaison positions also have any access to capital dollars for small amounts to help people do what they want to do within their neighborhoods?
So through you, Mr. Mayor, as Ms. Tasker referenced earlier, our starting point for this entire reorganization was that it was to be done within existing headcount and within existing dollars. So the shorter answer is right now we have no additional capital dollars to do that work, but it is something that we're going to look at through the 2017 budget process in terms of reallocation of some existing capital dollars.
Thank you.
Councillor Etherington.
Through you, Mr. Chair, first of all, I would say I've always been impressed, Corinne, with the staff people that I meet at the community centres that I get involved with, and certainly the neighborhood groups. But I wonder, I was aware as this organizational structure was going ahead of some concerns from a few staff people about what was happening and what would be happening to their jobs. Now, I'm not looking for any detail, but can someone tell me what the general fallout was with staff affected by this new structure? Did people come out of it happy with the new structure, I guess is what I'm getting at.
Mr. May, a question more for you.
Sure, through you, Mr. Mayor. I would say that I have been very pleasantly surprised at the reaction to the new structure. There are certainly individuals who are negatively impacted. No matter how hard we tried it, there were some negative impacts. So, of course, you would expect that they were not happy with the reorganization. But for all of the community partners and neighborhood associations that we worked with, I've only had one neighborhood association reach out to me to ask some follow-up questions. And so that says to me that it was very well received. And I have had staff come to me proactively to say that they think this is a more effective model.
Well, that's good to hear. When you talk about the negative, did people lose their jobs in this process?
Through you, Mr. Mayor, yes, there was some job loss of our part-time employees, and we have dealt with them the way the city would normally deal with those very difficult situations.
Can you tell me how many, Mike?
Through you, Mr. Mayor, I believe there were 5 part-time positions that were eliminated through this process.
And I presume that will help put us in a position where you're saying there will be, I'm a little puzzled, on page 2-5 we talk about fewer part-time positions, more full-time positions. That usually means more money, but I've been told that does not involve more money. I'm correct on that? Just following up on Councillor Gazzola's question.
So through you, Mr. Mayor, that specific change of converting or combining some part-time positions into a few more full-time positions did cost a few, surprisingly not as much as you would think, but some additional dollars. But then we offset that by other changes we made that were reductions in the budget.
Okay. Thank you very much.
Councillor Fernandez.
Sorry, I should have asked this question earlier, and on page 2-23, when you talk about provide affordable subsidized rentals to community, because you said that our rental, the number of variety of people who are renting spaces at the community center, have we looked at how we're going to offer some subsidies, or is that yet to be decided?
We currently do, in that our rental rates are far below the cost of providing the service. So that's the subsidy that we provide. We are not doing cost recovery, with the exception of corporate rentals that we do to companies that can afford to pay. And certainly even the posted rate, we have some flexibility. If there's a community group that is serving a purpose outside of our neighborhood association programs that we really want to come in there, we can negotiate with them to have a rate that's affordable for them.
Okay. I'm not sure if I'm going to be phrasing this correctly, but I have had an understanding that quite often when groups go into the facilities, that the neighborhood association wants to host some kind of event, that we have to have staff, and that is what adds the additional cost to some of the rentals. In the past, and I stand corrected, there was a time when neighborhood associations would have a key to the community center, and if they had an event or a special or something function that they wanted to host, they could do that. But that's not the case anymore. Is that right?
That's correct. We need to have at least one staff member there.
Okay. So considering that these neighborhood association groups are doing an awful lot for us in terms of volunteerism and organizing programs, why would we, maybe this affiliation review that we're looking at may include some of that. So if it is, then you can just stop me right there. But if it's not going to be part of that affiliation review, can somebody help me understand why we would not return to some of that ability for neighborhood associations to do that?
It's a question of liability right now. I think it's the way that we've operated in the past in terms of making sure that we have a staff person there to close the building and ensure that it's locked when the event is over. That's not to say that we couldn't trust a volunteer to do that, but that has been our position at this point. I don't know, Mr. May, do you have any additional comments on that?
Mr. May?
Through you, Mr. Mayor, I'm not sure that in the past that was supposed to happen, to be totally honest with you. But it is something on our radar. One of the items that Ms. Tasker floated with you is this idea of keeping the community centers open till 11 o'clock at night. And I think there are a lot of people in the community and on staff who think that's a great way to get our youth into the gyms, using the gyms as just one example. And so we are actually, one of the recommendations in the first report of Ms. Taskers is to have community center staff work with our legal and our risk management folks to see if there's something we can do on this issue.
Okay, thank you.
Okay, Councillor Singh, you have comments, so I'll come to you in a moment. Just on the question and just on that last one, certainly I would like to see us do that and see us pursue those possibilities. I think, as I think staff and council have often heard me say, when it comes to risk management, staff need to give council the best advice possible, but fundamentally we need to make decisions in terms of how much risk we're going to take, but we have to be given the opportunity in the first place to make that decision one way or the other, and sort of not have it stop at a management level without council having the opportunity to make that consideration. So I would certainly welcome the opportunity to see those discussions occur, because I think there's some advantage, and there's many examples where those kinds of things are already in place. The second one is just on the issue of hours of operation, and when I look at the Saturdays and Sundays, in terms of the weekends, it seems that we sort of went all day, both days. Did we look at options such as, KPL uses as an example, where perhaps we open one day or part days, or open some but not all of them in the community, as a way of providing some options for people throughout the city? Was that considered at all?
This is just kind of the utmost worst case scenario, I guess, if you want to put it that way.
Okay.
It's, obviously anything less than that's going to cost you less, and if we had a specific scenario that you wanted us to look into, then we could calculate that out for your consideration.
Okay, and on the other question then is just in terms of the custodial efforts that are required. Are those absolutely a must? Like it almost looks like there's as much custodial staff as there is other staff there, if not more. Is that absolutely a must, or can we look at some sort of hybrid that doesn't necessarily see a custodial person there all the time, because the work will get covered off the next day when people are there? Has that been looked at all? Ms. Fletcher?
Through you, Mr. Mayor, if memory serves me correctly, we were actually looking at bringing in a contracted service for all three community centers, either at the end of the day or the beginning of the next day.
How would that work in terms of our existing staff then?
Again, if memory serves me correctly, we were looking at it in terms of the additional, not what's currently existing. But we'd have to go back and double check.
Okay, maybe I'll have some offline conversations with folks. Councillor Singh, comments, Councillor Gazzola as well, or question? Comments, okay. Councillor Singh?
Yeah, thank you, Mr. Mayor. But just from what you said and the comment that you made and also the question, I just have a brief clarification I would want from staff. Would you allow that?
Go ahead.
Yeah. So with the increased timing, is staff have in mind that would require full staff complement in the center, or no, that the costs that are kind of considered reflects on a smaller staff complement?
It's just based on one additional customer service attendant, so that's our Series 9000 staff, with the exception of downtown, which requires 2 at all times.
Okay. I assume that I just wanted the clarity so that we limit that cost as possible, so that we can make that feasible, and that would be my comment. And I think from some stuff that Councillor Fernandez said, and very much so from the discussion through you, Mr. Mayor, that the point I was trying to make is this: I don't see necessarily as purely a operational review. This is, I think, a more of a community discussion. How do we allow our community centers to be better used? beyond just how our staff complement exists, and we can bring efficiencies there. And as we go through this process, we only pass a comment to staff that I would hope that there is some allowance where council can take part in giving our reflection through conversations we have on a day-to-day basis from our citizens who use those community centers and who have outlined certain deficiencies or improvements that could be brought about. And if you're doing this overall change, now is the time that it can be all-encompassing rather than having to come back after a few years to do it all over. And that would be my comment.
Councillor Gazzola.
Yeah, I'm a little disappointed in what I'm seeing here as a result of this study. And it's not that you haven't done a good job or that the staff haven't done a lot of work on this, but I'm really not seeing much of a difference in what's happening. There's a few staff shuffles. I'm still trying to follow out what really has happened through all of that, but I wanted to see more use of our community centers. It really bothers me to see whenever a festival day, a weekend, a holiday is coming up, we see a press release of all the facilities in our community that are going to be closed. Here we have a party atmosphere for a festival, and everything's closed. And that's why I keep going to that concept of, can the neighborhoods do more themselves? I had an occasion in the last 6 months where an individual wanted to put something on for his particular neighborhood and needed a place and looked at the community center and was given a humongous rental price. And looking at it and finding out that when that function was held, that the community center would be in exactly the same position after the function was held as before the individual came in with his group to hold the function. In other words, they cleaned it up themselves. The only cost that the city incurred, it was in the wintertime. It might have been for a little additional heat, but I even rationalized that by saying more people in the building, less heat is required. So I couldn't really see what costs were involved, and yet we're faced with this cost, because of course there has to be a custodian person to stand around or do whatever they do when they come into this situation, and that has to be paid and all that. I must say that the community center group worked closely with this individual and got things down to a reasonable rate. But I would like to see us go more and more into that. You know, we talk about this, and the first thing that jumps on the table is the big L. The big L. L with an L, not a big L with a... It's the liability. Well, sometimes we need to really look at the liability, and sometimes we need to take a few risks on. I know of a community center that has, in our community in the past, have allowed some young people to go in on their own and participate in sports activity later at night and carry on, and nothing happens, and of course, and they fully realize that anything happens, this is all over, but people are responsible and mature. And so we need to have, I really feel we need to give the community a greater opportunity to look after their own neighborhood. So I guess I don't get a chance to approve or disapprove this report, so those are just my comments.
Thank you. Councillor Galloway-Seelock.
I'm surprised at hearing some of the comments so far, because everybody was interviewed in this process, and we already provided our input from a council perspective or individual council perspective, or from where we hear from our community. I'm really happy with the direction that this is going to date. I think a 1 to 2 year review of what's been accomplished is a really good time frame for us to reflect. I think there's a number of steps that still have to roll out for us to totally understand where this is all going to go. I think one of the important pieces that we talked about is that staff are going to have to look at the mandate and the mandate of our community centers. There's a number of different pieces, I think, that are going to bring this all together for us at the end of the day. This is just the beginning. This is the results. Now we have to take the recommendations and really move them forward. My one concern is that representing a new area where there's no gymnasium in the center, that a one model might not suit all. And so I just want to give that as feedback or perspective when looking at whether it's the hours of operations or some of the other things. Having a lease space could generate a lot of different concerns and scenarios. So I just ask that that be kept in mind as we move forward with, the potential of whether hours of operations are consistent or not. Just because I think it'll create different concerns with the lease space that we do use at Williamsburg. So yeah, I want to say that it's good to see this here. I think is a good first step. I think it's definitely going to all come together in the long run, and I look forward to seeing those pieces as it moves forward.
Thank you. Councillor Marsh.
Thank you, Mr. Mayor. I want to just comment that I think that this report is excellent, and it's right in line with, the direction that we've given, which is to get a lot of feedback from multiple stakeholders, and that is exactly what has been done here in a very fulsome way. And I would only add a comment that it would be, when the next report is rolled out in the fall, it would be good to see the folks who were part of whether the focus group or the survey, or any other type of engagement. Would be good to close the feedback loop and say, so this is what we heard and this is what we're doing as a result. This is what we're recommending as a result. Just to make sure that people understand that based on all this wide consultation, we are directly taking that feedback and using it in implementation.
Looks like those are all the comments. I'll just add my own. I want to thank staff for all of their work on this audit. It is an important one. I mean, one of the things that in talking with other municipal leaders in other communities, including those in our region, and certainly talking to our own residents, that often gets highlighted is how much people value our system of neighborhood associations and our network of community centers in the community. And I think this process helped identify what's going well, identified some areas where maybe we do stand to have some improvement, and a process that's going to be undertaken at a staff level and as appropriate with council and the community to look at some of the issues that remain outstanding. Certainly, from my perspective, I think looking at ways to deal with the hours of operation piece is one that I'll certainly be watching for going forward. But overall, I think we're in a good direction, and appreciate the efforts made by staff on this. So with that, there isn't a motion, a recommendation required for this one. So I guess we'll move on to item number 3 then. And that would be back to you, Karina, for the risk management update.
All right. So as the title indicates, this is my annual risk management update, which really the purpose is just to provide you as members of the Audit Committee some assurance that management has a good risk management program in place. So with this year's update, I'm going to be talking about 3 different topics. The first is to give you a little bit of an update on the refresh of our service review prioritization, which you had requested last fall. A brief update on our risk management training program, and then a new topic, which it's a really good news story, and I wanted to share it with you, and that's a little bit about compliance risk. And I'll pause in between each one of those 3 for questions if you want, because they're separate ideas and information. So the first topic was the refresh of the service review prioritization. And if you recall back to 2012, Audit Committee had approved the framework that would allow us to prioritize all the services at the city for the purposes of audit and review. The framework that you approved at that time consisted of 3 factors, the first being overall risk for the division, which was a 60% of the total score, operating expense budget, which was 30% of the score, and the date of last review, which was 10%. So all of those factors came up to a total score for each of the 95 services that we had identified at that time, and it produced a list that was ranked from high risk to low risk, taking into consideration areas that had low expenses or had been recently reviewed. So as you know, every year we pull off that list for our work plan that we present to you for approval. So we're at the point 4 years in now where you had requested that we refresh that list and maybe take a new look at the risks just to make sure that the list is in the correct order still. So Kathleen Woodcock and myself are in the process right now of gathering the information from across the corporation about risk. Now we have changed it slightly in that we, instead of doing 95 services, we have consolidated it down to the 44 that are listed in the business plan, just for consistency. That is out for review right now and will be coming back at the end of June. Once we've got all the data, we'll be obviously putting together the prioritized list, and you had requested that you have input on that list. So that'll be coming back to Audit Committee in September for your input. And then back in December, we'll have the normal process for approving the work plan based on that list. Now, just as a little piece of value add that we've added onto it rather than just gathering it for this purpose, we've got all this wonderful risk data available to us now. We're going to be creating corporate and departmental risk profiles. And basically what that is to look at the questions that we ask in the risk survey and pulling out areas of high risk across multiple divisions so that a department can see where are the clusters of high risk that they need to consolidate their resources and strategize around mitigation. And we can look at it from a corporate view as well. And that will allow us to better use our resources to that end rather than having each division go off and try to mitigate their risks on their own. Another improvement to the process this time, instead of leaving it for 4 years to update, we are going to institute a biannual mini survey to update the risk portion of it. So any questions on that before I move on to the next topic?
Councillor Marsh.
So by biannual, do you mean every 6 months or every 2 years?
Every 2 years.
Okay, thanks.
Any other questions? Not, we'll go on to the next one.
All right. Very short update on the risk management training. So as I've told you a number of times before, my intent is to try to embed risk management into our culture. One of the ways that I can do that is through training of staff, and I do have the Risky Business course that is listed in capacity. I've run 2 actual sessions before that were in the catalog, and now it's on demand. So as divisions or groups need the training, they will come to me and request it. So just recently we had a group from CSD request the training, and I presented it to 15 staff. The other way that staff get education on risk management is through actually doing a risk assessment. So going with any of our internal reviews or audits, we always do a risk assessment now at the beginning, where we get staff to participate in identifying their risks and then rating their likelihood and impact. So we've had 3 in the recent past that have gone through it. So with the accounting review that I'm doing right now, 12 staff participated in the risk assessment. Community centers was late last year. We did 30 staff from the community centers participated. And recently, 57 staff from IT have also gone through it for each of the sections within IT. Any questions on education and training on this area?
Yes, we have a couple. Councillor Fernandez.
So, Karina, just for Joe Public to sort of understand, because I like to believe that people are going to be reviewing this on the internet, on the webcast. When you're talking about risk, what kind of examples would we give to a regular citizen when we say we're reviewing risk or we're assessing risk? Can you give me some concrete examples what that would be?
Sure. In our corporate risk framework, we have 7 categories of risk that we look at. One of them is service delivery. So what are the risks surrounding how we deliver our service? We have staff risks, so that's a risk of turnover, risk of health and safety issues for our staff. We have public risks, so a lot of that has to do with safety of staff or what negative impacts may come from participating in our services. We've got environmental risks, which are risks around us damaging natural capital in the process of our work. We have financial risks, which is anything from fraud, theft, liability, claims, those types of things. Compliance risk, legislative risk, so the risk of not being in compliance with any legislation. And then we've got our reputation risk, so anything that could damage the reputation of the city. Okay. And that's what we talk about. We can talk about risks in any one of those 7 categories.
Okay, and that's wonderful. Thank you. I think that we get a chance to write columns on Kitchener Citizen, and sometimes we tend to stay on some of the same topics, and this might be something interesting to educate the public on the different kinds of risks that we have to deal with every day as a city. Are some of these risks ones that are really just inherent to municipal government as opposed to risks that you would see in a corporation that makes hearing aids, for example?
Certainly, yes.
Okay. So we have areas that an industry may never have to be concerned about. I'm just looking at, pretty much all of them. I would think that some of them would be concerned about their reputation and their theft and maybe not environmental. Well, environmental, I guess, if they've got spills.
Yeah,
and just
all of the categories would apply to pretty much every business. It's just what are the specific risks that are affecting you.
Right, okay. All right, thank you.
Councillor Gazzola.
Yeah, I want to go back to the previous just quickly, and then I tie into this. But you talked about 44 services consolidated down from 95. Is there a place where one can quickly go and look at a list of those services?
In the business plan. So on the intranet or internet, there is the business plan.
All right. Getting to this session here, what in your training, what do you do exactly? I don't. From what I understand, the staff people talk about the risks that they can see. What do you? Where does it go from there?
So let me just clarify the question. Are you asking what I teach them in the training?
Yes. Yeah.
Okay.
Where does it go? Yeah.
So it begins by just kind of familiarizing them with what risk is. It's not just about financial. It's all of these other categories of risk. I make them aware of our council policy around risk management and the scale that we use for impact and likelihood, because we want everyone to be rating risks with the same terminology. We talk about risk tolerance, what council has approved as the amount of risk that you're willing to take. And then we talk about all the tools and techniques that they can then use to go about doing their own risk assessment, either for a project or for a division.
Is it a long session?
3 hours.
Is it ever been done with council?
No, but you're more than welcome to request it. I'm happy to come and teach.
Is it something that would be worthwhile for council to sit through on a Monday?
I could probably modify it to be more relevant to you, certainly.
But it would be relevant.
Yes, I can go ahead and
Thank you.
Look into that for you.
We can look at maybe doing that in one of our strat sessions in the future, Councillor Gazzola. Okay, go ahead, Karina.
All right. Okay, the third and final topic today is risk management of compliance. And why I've brought this forward to you, I mean, it does fall under risk management, but it is a good news story that I wanted to share with you, some accomplishments that staff have done over the last couple of years in this area. Just in general, compliance risk is something that is an internal audit responsibility. But as you can imagine, with all of the multitudes of legislation that we are required to comply with across the corporation, I am an audit shop of one person and I cannot monitor everybody. So as with many other municipalities, we've chosen to take a decentralized approach where it's a philosophy of putting the tools in the hands of supervisors so that they can be monitoring the compliance of their own staff with internal audit oversight for that monitoring. So with that in mind, I'm going to talk about a very specific piece of compliance monitoring, and it's related to our vehicle and equipment compliance. Now, just to give you a bit of background on this, if you're not familiar with it, any corporation that has a fleet of vehicles or equipment that are considered commercial vehicles, which are over a certain weight limit, must comply with the CVOR system, which is Commercial Vehicle Operators Registration. You must have a valid license under that system. It's very similar to your own personal license that you hold. If you have a collision or a conviction, or you get pulled over for speeding, you get points against your license. And it's the same with this CVOR system. So you don't want points, you want a low score. You'll see on the chart on the slide there, a score of 0 to 35 is considered to be in the green, or a good score. 35 to 50%, the MTO will send you a warning letter. 50 to 80%, they will come in and send an auditor in to do an audit of your processes and give you areas for improvement. 80 to 100% lands you with an interview with the MTO where they require an action plan. And anything over 100%, which it seems odd that it could be over 100%, but just based on the way they do their calculations, it is possible. It could land you with sanctions, including the removal of your license to operate, which you do not want. Now, you'll see on the slide there that we've incurred a number of these things, and it may seem quite bad at first glance, but I'll just give you the story behind it. Back in 2007, the MTO changed the way they did the calculation, and prior to that, we were in the green all the time. Once they changed the calculation, which favored long-haul trucking, ones that had a lot of mileage, compared to municipalities that do not, we bumped up into the warning letter range, as did most municipalities. From that point, we took some actions to try and decrease our score, but the big chunk of the score is related to the collisions and convictions, and unfortunately we had a couple of serious ones leading up to 2009. And that led us to top out at a score of 120%, which, as you can imagine, was quite shocking. It did not lead to sanctions, thankfully, because this was a new calculation. A number of municipalities were in the same boat. But we did have an interview with the MTO at that point, and they required us to put an action plan in place to try and decrease that score. Now, it also says on this slide that we had a facility audit, which came in 2014, and that was just kind of as a result of the backlog of all these municipalities with high scores. A lot of them did go through this, and it was actually a good thing because it allowed them to take a look at our operations and give us suggestions for how we could improve. So I'll talk a little bit about that in a moment. So beyond the obvious implication of losing your license to operate, you got to take a look at the legislation and why it's in place in the first place. And really, this CVOR system is there to protect the public and to protect our staff from safety issues related to operating vehicles and equipment. It's also to protect damage to property, either ours or public citizens. So our dilemma at that point when we kind of topped out was, how do we decrease our score and how do we manage these risks? So at that point we had a task force that had been working on this in the background when we topped out at 120%. We realized that we needed to bring in some additional folks from across the corporation to look at this. So we created the Compliance and Conformance Evaluation Committee, which is a mouthful. We shortened it to CCE, but it really was to capture compliance with legislation, but not only that, we wanted to also capture conformance with our own internal standard operating procedures, which are there to help protect staff as well. So we created this committee, and it was cross-functional to have membership on that committee from all the areas that have vehicles and equipment. So facilities management, Kitchener Utilities, operations, fleet, enterprise, as well as representatives from HR and myself as the chair of the committee. Our purpose in creating this committee was really to hone in on that decentralized approach, to say what framework can we put in place that will allow either other auditors or staff or management to self-regulate and to monitor their compliance with the legislation and with our own standards. Now, when we created this committee, the original focus was obviously in response to the CVOR score. So we were focused on the equipment compliance and vehicle compliance. But we created it with a sense that we can expand this to other compliance topics once we're done with this, once we've gotten our score under control. So you'll see that at the end of the presentation, how we have now moved on to other topics. So now I'm going to take you through some of the accomplishments that this CCE committee has done in the last 4 years since we've created. The first area that we looked at, just as an aside here as well, as I said, the driving collisions and convictions are a big part of the score. That was being dealt with separately with training. The part that we were focused on as the committee was the roadside inspections. So in your report, there's a number of things that the MTO can check for, and that's what we were focused on compliance with. So the first one was the daily vehicle inspection. So each vehicle has a logbook, which the driver must fill out every time they drive the vehicle. So what we did was create an audit checklist for any supervisor or any external auditor to come in to check that they're doing that correctly. Because if they're pulled over by the MTO and it's not done properly, we'll get points against our license. So we created the checklist, but then we added things to it as well. Load security, WMIS, fire safety, as well as personal protection equipment. So there was a number of things that we're checking for. We did start off with management auditing each other. While this was a great educational tool for them to get to know what was required and what the legislation was saying, we found that it was a poor use of their time because we have so little staff to manage such a big group of employees. So we have moved to another method, and we have hired an external consultant that comes in. He's an ex-MTO auditor, so he knows the legislation inside and out. And he comes in on a monthly basis to do audits for us randomly at different work sites and locations to see that we are in compliance. And this has been very cost effective for us. In 2015, there were 231 vehicles audited in this program. The good news story is that we've seen compliance rates increase over time. At the beginning of 2015, only 25% of the audits conducted were perfect scores. And by perfect scores, I mean everything on the audit checklist was good. At the end of 2015, we were at 84%, which is a great improvement. Another metric that we track is the number of non-compliances per vehicle. So that's basically an average across the whole fleet. Our goal was to have 1 non-compliance per vehicle. At the end of 2014, we were at 1.5. We've since decreased it in 2015 to 0.78, which again is a really good news story. We're seeing that more and more staff know what the expectations are and that they're doing it correctly. We also track what the non-compliances are for, and the majority of them now are related to the completion of the logbooks themselves. Not to say that they're not doing them, but that there may be something wrong on them. So it's not affecting the safety of the public or the staff, but if an MTO auditor pulled them over on the roadside, they would give them points against it for not completing it correctly. So that's something that we're continuing to work on by education. As well, whenever these audits are done, management is required to come back and report back with corrective actions within a week. So we're very timely resolution of these, and we're making sure that people understand where they went wrong and they can correct it the next time. The next area that we looked at under this was defect reporting, which is another thing that the MTO can check on the roadside inspections. And this was conducted by myself. I've done 4 of them over a 2-year period. And it's really just tracing the path of any defects that are identified on the logbook, making sure that they are fixed by the mechanics and then signed off to show that the repair was done. Most of the non-compliances were related to just signing off the book to close the loop. That's not to say that they weren't completed. The mechanics actually did the work. They signed them off in our online system, but the MTO auditor doesn't see that. All they see is the paper logbook in the vehicle. So making sure that the mechanic is doing that is something that we've trained them on now. Another area we looked at was collision review. Collision review committee is something that's been in place for many years, and it's really to look at, once a collision has happened, was it preventable or non-preventable, and what are the corrective actions that need to happen to make sure that it doesn't happen in the future. So obviously collisions are a main component of our CVOR score and something that we take very seriously. So as I mentioned, we've kind of ramped things up in terms of the training. We've seen results with that too. We've seen 60% less collisions for the summer students from 2015 versus 2014. Although I don't have the numbers around it, we also saw less winter collisions this year. We had a specific defensive winter driving course that we put on this year for the drivers, which has helped. On the administrative side of this, previously we had HR following up on all of the corrective actions. They are spread very thin in that division, and we're not able to do it on a proactive basis. Since we have created the vehicle and equipment compliance area under fleet, they have taken over this responsibility based on recommendations from the CCE committee, and it has helped immensely. We've been able to put administrative focus on this to follow up with managers and make sure that the corrective actions are happening. We've decreased the backlog of these from 87 down to 0, which means that we've got timely resolution and we've got accountability of staff. We looked at hours of service, which is another MTO administrative thing that they can look at in the roadside audits. This was also a focus of the facility audit that I talked about at the beginning when they came in to look at our processes. Just a kind of an overview of the legislation in this area, drivers must log the amount of hours that they're driving, and they must have a certain amount of rest periods in between driving to avoid fatigue. So when they looked at our records, about 50% of the non-compliances that were found were related to the software that we were using. So that was a simple fix. We upgraded the software. It now includes our proper address and a place for the plate number of the vehicles. The other half of the non-compliances were related to data input errors by employees. So inconsistencies, things like putting in hours of work when PeopleSoft says they're on vacation, doesn't jive. So now we've got some error reports that are being spit out that are now being monitored by the vehicle safety and compliance area and followed up by management. We also have that third-party auditor that I talked about coming in once a year to go through all of our records and provide more areas for improvement. Now, this last piece is not something that the CCE committee did, but it is related to the CVOR score, so I've included it here. All of our vehicles are equipped with GPS, which not only track the location of the vehicle, but they also track driver behavior. So things like speeding, harsh braking, seatbelt use, idling, and harsh acceleration. In the past, management did receive reports on this, and were able to do some general talks with their staff about what they were seeing, but you could never link it to a specific employee, because you could have 4 people on a crew driving a specific vehicle. You would never know who was driving. Luckily, there has been budget approved for some key fobs that will allow us to specifically pinpoint who was driving. And this will make the accountability with staff a lot easier for management to track. So all of this work, what is the result? So all of the driver training that has gone on, the monitoring, the GPS monitoring, as well as all the work that the CCE committee has done, has helped us to decrease our CVOR score. And that was, the objective in the beginning. In April, we were down at 39.3%, which is the lowest that we've been since 2014. Now, we did bump up a little bit in May, and we're always going to have fluctuations. The way that the score works is, some collisions may fall off the record while others come on. It's a 2-year cycle that they are on your record. I will point out that we are hovering right around the municipal average. So all municipalities in Ontario with greater than 40,000 population, the average is 41.3. So we're kind of above and below that average. Having said that, though, that average is still in the warning letter range. So our goal is to get it into the green, but I am confident that we are doing everything that we can right now to do that. We've improved in so many areas, and I think it's such a great news story that we've decreased this and we're starting to hold it steady around that level. So just to move on to some other accomplishments with CCE, as I mentioned, the idea was to then expand to other compliance topics. The next one we tackled was the traffic protection and construction site safety. So again, we, as a committee, created a checklist that supervisors could then use when they go out on a construction site to ensure that their staff have all the proper safety precautions in place. Not to say that they weren't doing that before, but this allows them to make sure that they've checked everything and also to have a record of it, so that if the Ministry of Labour is ever called in, we've got our due diligence to say that the supervisor was there and that the supervisor checked it. And this is really just to ensure the safety of staff and public. We're rolling that out this summer to our construction sites. So going forward in the future, the original CCE committee, which was all those members that had vehicles and equipment, we've been disbanded other than to report back once a year to hear about the CVOR score. But all of the members have then since volunteered for these 4 new committees that we've struck. And we've brought in other members of the corporation who have specific expertise in these areas as well. So we're going to be tackling the contractor safety program, personal use of vehicles, legislative compliance, specifically in the areas of wastewater, materials handling, and contaminated soil, and standard operating procedures for operations. Each of one of these subcommittees will then be reporting back to me on a periodic basis to give me a status of how they're making out, and then we'll go from there. Once we've tackled these 4, we'll see what the next 4 will be. So just in conclusion on risk management in total, as you can see, we've got many proactive things happening where we're identifying risks, we're monitoring, we're mitigating. And as a whole, I think we've got a greater understanding of risk management across the corporation. So any questions on that last topic?
There are a few. Councillor Yanetsky.
Yes, thank you for your presentation. Very enlightening to see this is happening, and it's a good do thing, as I would see it. A couple of questions, of points that you made out in terms of, or identified in terms of, I guess, making sure we comply with the MTO regulations in terms of making sure your vehicle's in top order before you go out, etc. To what degree do they include other equipment that is used on the roads at times? So you got your backhoes and street sweepers and sidewalk removal equipment. They're not licensed, yet you have to get from point A to point B, and you got to use the street. Do they have to be MTO required regulations?
We've gone above and beyond what the legislation requires, and we have logbooks for every piece of equipment and every vehicle that we have, even if it's not a CVOR vehicle. So we've applied this across the board.
So each inspector or each person who's going to be using it does their little routine checkup, etc.?
Yes.
Just before they use it?
Yes.
I'm just wondering how you do with the fire department before they go out, when they got a 911 call, they're not going to be checking the equipment before they go out, or is this a different routine requirement?
Yeah, they are in and of themselves quite different, and they are not part of this. They have one CVOR vehicle, which is under the program that we talked about, but the emergency vehicles do not apply to that.
Okay. What about other vehicles used within the city, cars and maybe small trucks, pickups? I'm not used to that. Is there a certain weight category that they have to meet, or how does that work?
4,500 kilograms is what makes it a CVOR vehicle, but like I said, we've applied this program across all. So even our compact cars that we have for the ride sharing or whatever, those are all need to do the daily vehicle inspections and follow all of the procedures that we have for the CVOR vehicles as well.
Okay. Well, that's good. One last question I have is, with the score that you have to try to make sure the lower the better, mm-hmm. And of course accidents happen and there's responsibility. What happens in a scenario where we are not responsible? Yeah, I mean, you could be at a red light and somebody hits into you, and now you got a collision. Is that reflected in your score, or is the other party to blame, or how does that work out?
I'm not sure of the exact particulars, but I believe they determine whether it is preventable or non-preventable, and whether you're at fault. I believe the ones where you're not at fault, you do not get points assessed against you.
Because I'm just wondering, on personal vehicles, if you're not at fault, well, the other guy pays for it, sort of thing. Whereby here, you could be still at a red light in a commercial vehicle, and somebody hits you from behind. I
could look into that, but I don't believe we get assessed points when it's not our fault.
Okay, I just want to be sure on that we don't get blamed or deducted for
Mr.
behavior.
I know in the past there have been ones where it was when we went through our own internal collision review. We're claiming that it was non-preventable, and have gone back to the MTO to question it and to appeal it. So I believe that is the case, that if it is truly not our fault, we do not get assessed points for it.
Thank you.
Mr. Riedman, you wanted to add something? Oh, no? Okay. Councillor Gazzola?
Yeah, for you to do all of this work, there's obviously a cost involved. Do you have a ballpark as to what cost may be?
Cost of my time or the cost of the external auditor?
Of our complete organization. The reason I ask this, and this is something, these compliance things are brought down by the province. Do we have any say when they're bringing these compliance issues down? When they brought this whole new set of rules, were you aware of that, or did we have any input as to what they're doing and how they're doing it different, or?
I believe Philippe was at the table either after it came in. I think a number of municipalities had the same issue, obviously, because it does favor long-haul trucking. So I think they lobbied the government after that. I don't believe anything has changed.
Okay, the only reason I bring this, that there are a lot of things that are brought down to us by the province. We incur a lot of costs that we're not basically planning for, and I just wondered if you had an idea of what might have been encountered here. Thank you.
Any other questions? There don't appear to be, so I guess, is that it?
That's it.
That's it. Wow. No motion is needed, so I think we'll just use this as an opportunity to thank you for all of your great work. And motion to adjourn by Councillor Davey. All those in favor? Opposed? That's carried. And we'll take a break and come back to caucus at 4:30. We should maybe just do the special council part of it now while we're all here. Moved by Councillor Fernandez, seconded by Councillor Schneider. All those in favor? Opposed? That's carried. Great. Yes.